What are the growth drivers? Electricity is one of them, infrastructure is another, and on like that. Oil and gas, power, refineries, and others. Those are the ingredients or the firepower you need to fire your economy up. And what do you have in Nigeria? If you take electricity as a first variable, you are going to have a situation where the present system is such that the federal government is still pretending to have the capacity to be able to generate electricity for a complex and large economy like Nigeria, knowing fully well that government has never been efficient. Now, the model we are running now is that federal government is still buying all the electricity infrastructure. But you know what? It is based on the assumption that let government put the money, then they will privatize it and let the private sector buy it up. But that model is flawed, because if you believe that the private sector does not have the money to invest in that sector now, why do you believe that immediately you have invested your own government money, then the private sector suddenly will have the money to come and buy it off you? It's not a sustainable argument. What is sustainable is that if we believe the private sector can give these things to us more efficiently, better than what the government people have been doing for the past 50, 60 years, then let's give them the opportunity to go in and make these investments and run this sector on a purely business model kind of activity where it's profit driven. There is a process where the market can fix its own price, because what you use in killing markets is when you begin to interfere in pricing. And I've heard people in government say, or in the electricity regulation say, by April we will increase the tariff and all that. You know, you don't need all that. A market must run itself, and a market must fix a price that clears itself. But for you as a government, in regulation, the first thing you don't do is you don't touch price, but you touch all those variables that will influence price, like supply side, like what do you call it now? You can touch supply, like regulation, competition, and stuff like that. Those are the things government should focus on. Tax matters, incentives, tariffs, holiday breaks, pioneer status. Those are the things you do, and continuously encourage competition. Those things will put you in a position to get this system.
We have a lot to chew around that moving forward in the second part. But very first, let's try to. We've had some romance, as it were, with the political power blocks in Abuja, the markets. Has any one of them paid us any dividend? MK Abiola didn't get there. Yeah. Obasanjo was there for 8 years. President Obasanjo was in office for 8 years. Did we benefit from his presidency? President Mario Yar'Adua was there for about 2 years as well. Did the market benefit from that relationship?
It's relative. I think it's relative. But the way I look at it is this. Market may not have benefited directly from those relationships. But what is important is that the status quo was not fundamentally altered. You see, you can alter the status quo positively or negatively. If you alter it positively, you move it further in the direction of letting the private sector to be the engine growth of the economy. If you maintain it the way it is, at least we still have hope that somebody somewhere someday would tilt it positively in the direction we want. But what is dangerous is when you tilt it negatively, which is when you start bringing in more government into the system, start reversing a lot of the private.
Didn't the some market of that benefited from Obasanjo's privatization, aggressive privatization?
The market did, but Obasanjo could have done more. That is the issue.
Really?
Yeah, Obasanjo was a reform-minded guy. A reform-minded president, sorry for using that American slogan. A reform-minded president, to the extent that, during this period, Nigeria was just a big laboratory for reform processes. It was reforming the maritime industry with the cabotage law. It was reforming the telecoms industry with the regulation and all that, and licensing. He attempted to do a lot of privatization by privatizing refineries and the rest of them. He reformed the banking sector with the Soludo reform process. He reformed the insurance sector with the NICOM and Bailey and all of them coming to this. And the reform was
the pensions market and all.
The pensions market,
the debt market.
The debt market. And you see all these things are there. And that is why the presidents that have taken off from Obasanjo may not have done as much work as he did. But they are benefiting from the work he has done, because within those 8 years,
Obasanjo's administration actually laid a very strong foundation for the robust capital markets that we had in 2005, 6, and 7.
Absolutely so. I may not be particularly a fan of Obasanjo, but we cannot take it from him that he did a lot of work.
At least with his cabinet.
Absolutely, he had a very good team.
Minister,
he had a very good team. He had a very good team. But you see, what I believe is this: whatever we're doing now is a continuation of what we started in around 1988 when Babangida was there. There is nothing we are doing now that is different from SAP. And this is fundamental.
Financial markets liberalization,
deregulation, commercialization, you know, and all those stuff.
Nobody has given IBB any credit for that.
I don't know why it's not projected.
Nobody had given President IBB for those very landmark economic and financial markets.
But the truth is that he started it because the structure of the economy that we had before IBB was such that when we do our budgets, we have subventions for all those parastatals. Ikoyi hotels will get subvention. Federal Palace Hotel will get subvention, NTA, you know, Oshogbo paper mills, Iwokun paper mills, Okuiboku, all sorts of people, Alaja Steel, you know, Ajakuta. And you had the budget where almost 90% of them, of the money, is spread to support all these businesses that government had put money, and they're not bringing in anything. Rather, people are stealing the money and they're incurring debts in dollars. So that by the time they collapse, you not only lose the money you have invested, you are now saddled with a responsibility to pay dollar debts over a period.
To the foreigners.
Maritime authorities, Nigerian Highways, and the rest of them. That was the economy we ran. All those institutions have collapsed. We've wasted all those years, all those monies in dollars. Now, Babangida started the SAP, liberalization, deregulation, bringing in more private sector and all that. That is the direction to go.
Foreign currency.
But the difference is that in most economies, they complete that cycle within 10 years. The Asian economies, Malaysia and the rest of them, they do that transition within 10 years. We've been on it for close to 25 years. I know the truth of the matter, you will have to choose whether you want to start from bottom up or you want to do a top-down approach. If you are doing a top-down, you take the commanding eyes of the economy, telecoms, oil and gas, infrastructure, railway and all that, and then you cascade them down to those tiny companies that will be put on the stock exchange, like the hotels and the rest of them. But Nigeria adopted the bottom up, which is to say, let's start from the small ones.
What Obasanjo's administration did,
Obasanjo did not complete that process.
Yeah, but
we still have a lot of them outstanding. You still have NITEL, you have telecoms, you still have NEPA, you know, you have the refineries, you have so many others still outstanding. And those are the big ones that will have the greatest
market
impact.
need, isn't it?
Exactly.
So the question was that what Obasanjo did, was it because he was reform-minded as an individual, or because his political party or platform, the PDP, back then was the one doing writing the script?
Well, the truth of the matter is I'm not a member of the political party, so I don't know the internal workings of the political party. But what I know is that I suspect Obasanjo must have been the one driving it substantially. And the reason is this, you know, he's been in government. He was the greatest critic of this SAP formula when Babangida started all these things. But getting into government, he has realized that, look, all these other options will not work except we continue to move our economy in the direction of a private sector-led economy. The more government we take out of our lives, the better for us, because of efficiency and the need to have competition and increase output and employment. Now, for Obasanjo, what I believe is this. He wanted a change, and then he assembled a team. The change you will achieve can only be as good as your change agents. Your change agents must have the vision of where this thing is going to end.
But the change agents won't be there forever. They've got to be their cabinet members they could go. So you go back to the fundamental of economic change for a developed economy is the political base.
That's the way it should be. But Nigeria is still a peculiar situation. You know, we're still growing. We're still...
So we're driving, we're driving therefore through not the fundamental institutional framework that will help us.
You see, the ideal thing is to have those institutional framework. But the reality of the Nigerian situation is that the presidency is still so powerful that it can drive change in itself without necessarily going the way of his party. Not all the people in the PDP agree with what Obasanjo was doing. In fact, Obasanjo did not have opposition that is stronger than the opposition from his own party. All the people that attempted to impeach him were from his own party. So the only opposition he had, which was the strongest, were the people in his own party. Now, you will realize that immediately Obasanjo left power, Yar'Adua took over, the same party, the same government, the same continuity. And what did we see? All the privatization and some of the other liberal policies he had put in place were quickly reversed. So it's not really the political party. Because the same Yar'Adua,
it's the presidency.
It's the presidency. Because Obasanjo's personal conviction was, let's do this. But when Yar'Adua came, he just reversed it. And the party couldn't do anything.
Did the market benefit from Yar'Adua's presidency?
Well, I don't want to be judgmental about Yar'Adua's presidency because it didn't even stay long for us to... But all those reversals of privatizations he did were not necessary. Because the truth of the matter is, we are still going to go back to privatize those institutions. And by the time we are doing that, a lot of them would have lost value. A lot of them would not be worth what they were worth when we privatized them in the first instance. Now, another thing that is important is that for President Yar'Adua, I want to believe that he was able to do a lot of things he did simply because some of the reform processes that Obasanjo handled were not institutionalized enough to the point that nobody can reverse them again. That is why I talked about a president having the personal conviction and making sure, with or without the party, you get these things done. And when you do them and put them in the hands of the private sector, and it's the private sector that has spent their money, there's no government that's going to come into reverse it. Take telecoms, for instance. No matter how uncomfortable Yar'Adua is with the reforms in telecoms, is he going to say MTN, okay, I'm cancelling this thing, you can't have MTN again, you can't have Glo again? It's not going to be possible. And that is what Obasanjo should have done in the power sector and the refinery sector, such that no matter what government comes in the next 5, 10, 20 years, it's not going to be possible to reverse these things anymore.
Okay.
That's the challenge.
We'll take a break. A key question for you: who does the market want for the next president? We're looking for a new CEO. Wale Oluwo from BGL. We'll be back after the break. All eyes on Nigeria's political circuit between now and the end of May, when the next president is expected to have been sworn in. So, what does the market want, and who will the market vote for? Wale Oluwo from BGL Group with us here this morning. Wale, thank you very much. Let's continue this.
Thank you,
the question is, what exactly does the market want?
I think
the next president.
The market wants a president that would ensure stability in the markets, and that will be clear in the vision of how to tackle infrastructure and how markets should work.
None of these folks who are angling for the office of the new CEO have actually said anything about the markets.
I think they are saying it indirectly. You see, as you make pronouncements on how you are going to run the economy in terms of infrastructure, in terms of your policy on electricity, because that's going to have a tremendous impact, and in terms of your policy on other variables that affect the market.
No one is taking the market head on. No one is saying, look, I'm going to cut bank CEOs' bonuses.
No, that's not the job of a president. That's not the job of a president. I think let's leave the private sector people to determine that. It's not for political parties to meddle into what doesn't concern them.
So the politicians those who wants to be the new CEO or the office of the president will talk in broad economic terms, but there are no specifics about the markets. So you can't really say this is the mind of this presidential candidate as far as the financial markets, whether it's currency direction, whether it's the capital, foreign direct investment, portfolio investment, you can't really tell. But we'll talk about where we're going to give you 12,000 megawatts of electricity, we're going to build roads, electricity, education for all, blah, blah, blah. We've heard all that.
I think they should be talking about both, because a lot of those variables also impact on the market indirectly.
Yes, but people want specifics.
Well,
Don't you want specifics?
I want specifics.
Yes.
But specifics to the extent of, when you say specific, let me take it the other way around. You see, markets are driven through regulations. The capital market is regulated by the Securities and Exchange Commission, and the money market is regulated by, the central bank, and on like that. So many regulators in the system. Those regulators understand the market better, and it is usually safer for the politicians to continue to talk broadly and not go into too much specifics, because these are still the same guys that will advise them, this is the direction the market should go, and this is the kind of policy that we must use to achieve this economic objective and these fiscal objectives. So maybe it's too early in the day, because I cannot possibly see probably a Buhari or a Ribadu going to the governor of the central bank and asking him specific questions on it may not oblige, and I can't speak for him. But what I'm saying is, those guys who are in the opposition, they are not likely to have all the access to all those information that will put them, or may put them, in a position where they can begin to articulate very, very specific policies that affect the market.
But the data is there. You have the budget every year, you have inflation, you have this. What else do they want to put it together? You mean we have a president right now, or we have presidential candidates that can tell us exactly what interest rate will be by the end of this year?
I don't know whether they have made that move to put themselves in a position to have access to information and be able to make their projections and see how what they are planning will impact on those figures.
Because people want to plan.
Yeah, people want to plan.
Investors want to plan on, hey, what do you think interest rate direction will be for the next administration? We don't have anything.
For me, that may be too specific for a politician. I think what is important for politicians at this time is for us to look at what their philosophical leaning is. If you look at a president and you say, will this president move us more closer to a government-driven economy, or we move in the direction that we want, which is a private sector-driven economy? In the utterances and the kind of policy statements the presidents make, we can discern and put ourselves in a position whether that's the kind of president we want. That is on one hand. On the other hand, as presidents make pronouncements in their campaigns, we also expect the press to be asking them specific questions, particularly the financial press. Let them be asking specific questions as it relates to markets. And these candidates will have no choice other than to start talking about markets, because people are losing value in the market and confidence is waning every day. We must put ourselves in a position to arrest that very, very quickly. But now, you have presidential candidates. I think 3 of them are the leading candidates. Buhari, Ribadu, and I think President Jonathan. For me, I think what is important is what will happen after the election. Let's be fair. Everybody has a calculable chance of winning. As long as you are in the race, anything can happen in politics. You never know how things can, begin to cascade and put you in the position of power. But for President Jonathan, he's run the administration for maybe some months. We seem to have some idea about what he's likely to do in terms of his economic policies and how they will impact on the market. You see, for Buhari, what we know of Buhari are those things he had done as a military administrator. But now he's coming into politics. But if the antecedents are anything to go by, I think our interest should be more in who will be Buhari's vice than Buhari himself, because Buhari has a tendency to give a lot of free space to whoever is his deputy or vice to run the economy. And if you look at the Nigerian system, the economy is substantially within the office of the vice president of Nigeria. So for me, I'll be interested in who the vice president to Buhari will be and who the vice president to Ribadu will be. But we also don't know whether there's going to be an alliance between those those two parties, and probably they may be able to present a joint candidate. We don't know. All these things are still speculative, but to the extent that the running of the economy by the Nigerian regulations is embedded within the office of the vice president, then you must have a vice president that is, very much alert to all these economic realities, has a sense of history of how we have come thus far, where we are, and where we should go after this. It's fundamental.
Well, we're rounding off the discussion, as it were, but I'm sure not many of us will forget so soon the last 2 years in which Abuja, the government in Abuja, turned its back, as it were, on the capital market. At the meltdown, there were cries that the government under the late Yaradua should bail out the market. Some of his foot soldiers or ministers said, it's your business in Lagos, you guys go sort it out. Yeah. We're not going to bail out the capital market, we will do nothing. Then a few months after, some presidential committees were set up to look into the market. We haven't heard anything from these committees over the last 2 years or thereabout. Until Lamido came in one way or the other, and via the operations of the asset management company, we're now beginning to see a relief. So if not for Lamido that had actually come in with what he did in 2009 August and provide a roadmap for turning around the banking sector and of course for the entire financial services sector, and everybody's latching onto that, whether it's PENCON, whether it's the SEC and all that. The government at the center disappointed everyone.
That's correct. That's correct.
So will the market therefore in 2011 have faith in any presidential candidate or party and say, look, we're voting corporate Nigeria, as it were, will this time provide as much support as were provided for the late M.K. Abiola for Olusegun Obasanjo in 2011 election?
I think the market can make that determination. But the responsibility of markets is to support, well, not support, but to assist any president that comes into office. You see, the financial markets have always been there. A president will come and go. The financial markets will continue to be there. So it is important that as presidents settle down, the financial market can present their basket of requests and say, this is where we think we should go. And then that debate will start. But the financial market should not expect it the other way around, where presidents come and begin to, tell the markets where to go. It's not healthy. And we must work through our regulators, because anyway you look at it, whatever government wants to do, they are going to be advised by people who are regulating the economy. But for the Lamido intervention, I think he has done a lot of good things, but I'll just sound some caution here. And the caution is such that, having stabilized these banks, it is now important for us to look at the transition to who is going to take over these banks. I want a situation where the central bank can work very closely with those who are already owners of the banks and negotiate these things with them. Because if you don't do that, I foresee a situation where we get to the point of disposal of these banks, and then the central bank is not in a position to put the shares on the table that will be bought by these potential investors. That is very key.
Now, very last question for you. I'm sure you're in the market, you've been there several years. Who is the market voting for?
By way of election?
Yes.
No, market participants are like ordinary Nigerians.
Yes, they are. But you guys talk all the time.
No, but market participants...
Whose name is on the front burner?
To the best of my knowledge, I don't think the market has made that determination yet as to who the entire market is.
Whose names have been bandied around? At least there'll be talks on the floor, in the trading room, in the boardroom, and all that. I'm sure the market somehow, you players by now should be comfortable with at least one of these guys.
No. I think the only thing the market knows now is that President Jonathan has been there for a while. So we're almost clear about the direction that his economic policies will follow. But we don't know about the other guys. That is one. Then two, the major campaigns have not started. The presidential candidates are not talking about the economic policies yet. A lot of them just emerged about a week ago.
Yesterday.
Yesterday, so they're going to sit down, they're going to have their economic team, in an ad hoc position and, talking around all these things.
So maybe too early, isn't it?
It's too early in the day, I mean.
All right, fine.
And like I said, the market is not going to go in one direction. People are going to go in different directions.
Okay, let's give it a couple of weeks more. then we'll bring you back and we'll ask you the same question all over again. Because I'm sure moving forward after all the primaries have been done and all that, on the floors and everywhere on the street, Market Street, everybody will start talking about, hey, I think we're a little bit more comfortable with this individual than the rest. Then we'll begin to perhaps, as you said, the media, we need to start asking questions. Jonathan,
specific.
we need to ask him a few questions. So I would like to ask him, where does he think interest rate will be? What will he do with the refineries? We want specifics, as it were.
And the currency market.
And the currency market.
How is he going to fund it?
How's it going to fund it?
With the depletion in the reserves and all that. These are the kind of questions that we will be asking. But let us see their blueprints first for the economy, and then we know how that one will impact on the market, and then we begin to ask the questions.
All right, well, thank you very much for being here Monday morning. And it was a very busy day on the calendar for everyone to be in the studio. Well, thank you very much. Wale Oluwo,
thank you,
the Chief Marketing Executive for the GMO4 BGL Group, one of the licensed investment banks in Nigeria, financial supermarket, as it were. Okay, let's get on quickly to some stories making headlines. The Tunisian stock market is feeling the heat with the political crisis. Of course, the President Ben Ali is hiding in Saudi Arabia with his family as we speak. So the market year to date is down 12.74%. That's the Tunisian Stock Exchange, one of the strongest markets and the largest outside sub-Saharan Africa. A very interesting development. The market is currently around $9.4 billion in market cap. Okay, it's going to be a very busy week. What else haven't we touched? The Chinese market was down today. President Obama will host a very good chief host for the Chinese President Hu Jintao on Wednesday. Meanwhile, China will later this week, I think Thursday, will raise bank's reserve ratio to 19%. An aggressive one there for you. Inflation interest rate decision will be on from this week till next week. Nigeria Central Bank and the U.S. Fed will hold very crucial monetary policy meeting next week. I guess that's about all we got time for. Gentlemen, I guess we can just call it a day. See you on Tuesday. That's tomorrow.